Alright traders, in this video, I'm going to be giving you an update on my portfolio, what I'm swinging overnight, and some updates on my latest video where we discuss, me potentially entering Robinhood call options, buying the stock, and also MRNA call options, buying the stock. So I have not entered those plays yet. In terms of Robinhood, like I said, I'm waiting for this gap. There's a gap to fill at 46.80. Once this gap fills, there's going to be huge upside potential for fill the gap, has a reversal, then it starts to climb back up and fill this gap right here. You got a gap to fill above at $70. So for Robinhood, I'm being patient and I'm waiting to see how the stock reacts at $46.80. I do think at the current price, it's definitely attractive and there's nothing wrong with doing a starting position. However, I'm just going to wait it out and see how it reacts into next week. As for MRNA, I'm completely on the sidelines for the moment. It is starting to look bearish. It really looks like it's going to continue to decline for the short term. Plus, we do have this gap to fill at 259.68. And for the midterm, I won't be surprised if that gap fills. And that truly would be the best price to start buying MRNA once this gap closes at 259.68. So in terms of my new position, as you guys can see, I'm still in my Fiverr call options, currently down 70% on those. So that is just not working out. In terms of AMC, still short AMC, 800 shares at 31.58. Going to be holding that over the weekend as my price target is going to be low to mid 20s. That's like a midterm short position. Is going to take some time. In terms of my full-on confidence, it's going to be on GRNV. So let's go over this strategy that I'm using on GRNV. This is my most confident swing trade for the moment, and I'm sized very heavily in this one. Normally, I do not short stocks and hold over the weekend due to the overnight risk and the hard to borrow fees. But with this current situation, I did the math and it is going to be worth holding over the weekend, even with the hard to borrow overnight fees calculated and the overnight risk. So let's get into this. My price target is going to be $11.25. If not on Monday, then on Tuesday. I'm expecting the first big red day to be on Monday. So let's go over this short selling strategy that I'm using. So this strategy, like I said, you can use this strategy on any stock that correlates with this pattern. So one thing that you're going to see happen a lot with small cap stocks, and by the way, I'm short at an average cost of $17.81 on this, with 3,000 shares. But one thing you'll see happen a lot with these smaller cap stocks is when they get halted as they're trending up, what tends to happen is they tend to gap up. So like, for example, right here, the stock got halted, right? And right before it got halted, the stock was trending up. So when you see a stock get halted as it's trending up, here's what's typically going to happen the vast majority of the time. It is going to gap up and continue to spike for the short term being. And then you can see it gaps up, gets halted again. So it was going up, it was gapping up, got halted, and then look what happens. Gaps up, continues to spike, right? Right here, halted again. So when you see this pattern happen, what you have to understand is when a stock gets halted as it's trending up, it tends to, gap up and continue to spike. Now, here's where the trend reverses and here's where the stock gets absolutely crushed. And then I'm going to show you in terms of a best entry on this. You can play this both ways. So in terms of the short side, this is the first time it got halted as it was climbing down. It spiked for a new all-time high, I believe, and then it started climbing down, and this candlestick formed a red bearish candlestick closing weak at the lows. So it got halted as it was climbing down. So when a stock gets halted as it's going down, what tends to happen is it tends to gap down and then continue to go down. And as you can see, had a massive gap down. So in terms of a key entry, when you see that happen, say you didn't get short right here, here's a key entry. Unfortunately for me, I missed out for the key entry and I ended up short selling at a lower price at the key breakdown. But I'm going to show you this is how you get in at the key entry. You wait for this gap to fill. This is what we call an intraday gap. So, right here at 12:04 p.m., the stock gets halted and then it reopens up from its halt at 12:29 p.m. You can visually see this 1 minute candlestick opened up lower than this previous candle. So go back to the previous candle, $20.07. The closing price of this candle is $20.70. That means there's a gap to fill, an intraday gap. An intraday gap is a gap that forms after the market is open. A normal gap is a gap that forms during extended hours, during pre-market after hours. But there's a gap to fill at $20.70 right here. So what you can do is when you see this gap down, this massive gap down, you could set a price alert for that gap to fill. And then once that gap fills, wait for it to turn into resistance. Wait for it to form some bearish candlesticks. Wait for some bearish confirmations. Like right here, see how it's topping out at that gap close level? Once it fills that gap and you see that pullback, those bearish confirmations, and also whatever you want to add on, whatever you want to stack on in terms of what you use for bearish confirmations, that's when you want to start short selling. So unfortunately for me, I wasn't watching the stock at this time, wasn't prepared looking at this ticker symbol. However, I did end up taking advantage of the situation of short selling a key breakdown. So in terms of the key breakdown, I was studying, this support right here around the 1760 area, and I just noticed the stock is consistently forming new lower high, new lower high, new lower high, going back to that previous support. So in terms of this channel, what I'm doing is this strategy is called a gap close reversal to fill the gap below. So you guys remember the strategy that we used on, Saba stock, where there was a gap that was waiting to fill below. Right here, there was a gap to fill right here at like $66. Once it filled the gap and bounced, we saw it was extremely oversold. It was having a reversal at that gap level, and then we're betting on the gaps to fill above. You remember that? Well, you can use the strategy both ways. The main difference is, besides short selling with this situation, would be it's an intraday gap. An intraday gap, it's basically typically a gap that forms due to a trading halt. But one thing you have to understand with strategies is these gaps tend to fill very, very quickly, these intraday gaps. And there's an intraday gap. This is what I'm doing. So the stock gap down right here. It filled the gap. Once it filled the gap, it had a reversal. We call that a gap close reversal. And then what we're doing is we're playing for the gap, waiting to fill below. There's a gap to fill below right here at 1125, guys. We're consistently using these key gap strategies for our key entries, our key price action analysis, playing on these gaps to fill, right? And we're consistently making money doing it. So what I'm simply doing is now that it's having its gap close reversal, it's going to start to fill this gap below. And there's a gap to fill below at 1125. So that, from a technical view, is what I'm expecting to happen. And just know these intraday gaps tend to fill extremely quickly, typically, if not the same day, then the same week. And you just have to understand it's having a bearish gap close reversal, and it's forming new lower high, going back to support, new lower high, losing volume, losing momentum, right? In terms of when it's really going to start to get crushed, your key support is basically going to be like right here. Your key support level is going to be, we're going to call it the low of this wick, 1475. Once 1475 turns into a resistance level, meaning once this stock cracks 1475 and then it bounces and then it confirms that 1475 is a resistance level, then starts to downtrend, it's going to go all the way down here, not right away, but it's going to happen where it starts to fill that gap waiting to fill below. So that's kind of the basics of the strategy, and that's why I'm holding this particular short position overnight. So my price target is going to be sitting, in the mid 11s. That's where I'm playing for the gap to fill below, and I'm going to be holding this over the weekend. And like I said, guys, MRNA, I'm on the sidelines. In terms of Hood, it looks like next week I'm going to be buying Robinhood stock. That's what it looks like. And like I said, there's nothing wrong with that starting position. In terms of taking a starting position, there's nothing wrong with doing it. So yeah, I mean, that's what I would look into for Robinhood, look into taking a starting position. I was not expecting it to close this strong, so now a starting position looks even more attractive. So yeah, those are the updates, guys. Let me know if you enjoyed the video, and I will see you in the next one.